Good evening, everyone. Can you hear me okay? Great. Is just thanks for joining me. We have more people than last time, but I talked about it a lot more. So I just want to be sure you could hear me in here. And by the way, Kevin, I did mention that if I had a 401k, I could just press a button, I'd be getting out. And it was more hyperbole, but it was talking about that this is just like 1987, that we rally and nobody believes that the bonds matter. And it was more hyperbole in there. So just keep that in mind. But, luckily, I kept my mouth shut in here and then I jumped on the chat in here. I'm glad, I picked the right time to get on. But I got to tell you right now is a couple of things. Yeah, Roku. I told you I hate Roku. It's not that I hate Roku as a company. I like the product. But Roku is going to do just what Twilio and let me show you what I'm talking about. All these people talk about the big short interest. So let me show you what I'm talking about. Go to FinViz and go to the insider lockup expiration. 6 months after a stock. Wait a second. Has an IPO. The insiders can start selling their stock. Look how much stock they can sell. That's why when you see the short flow 35%, it's not really 35% because they're anticipating that that stock's going to get knocked down by 74 million shares. Now you know why I've been talking about Roku. The problem is you wanted it to roll over like Twilio did. And instead it just got cracked tonight on earnings. The thing is, you might say, oh, they trade some puts in there. This is why you don't, I'm telling you right now, this is why you don't buy premium into earnings. I'm not going to show you the options yet. You see the stock is down 11 points, right? Guess where the 40 puts closed? 75 cents. You've been right on $11 and you're going to lose money. That's why you don't buy premium. So just keep that in mind. That's just why you don't buy premium. I wanted to do this. I didn't do it, and I wasn't going to mention it until it rolled over, unfortunately. I was going to buy the April 50, 40, 30 put butterfly, but it was way too expensive. It was like $2.90. I said, forget it. But we had talked a long time ago about buying the March 40, 30 put spread. And I just didn't do it, so it's frustrating. But that happens. Now, number one, somebody just asked something about two things. Why don't options trade pre and post market? Great question. But Larry, keep in mind the SPX does trade 24-hour options. The ES. Not every broker lets you do it, but they do trade. The ES trades all the time, the options. I don't do them. But there they are. And as you'll see, they're really thin. I mean, like 45 and 11. And they have big old wide markets. But they're there. You can trade them. So, just keep that in mind in there. The other thing in here is somebody just asked about why do the world markets have to correlate? They don't have to correlate at all. I'm just saying they are correlating lately. That's all I mean. So what I meant was this. That all these suckers had the same hourly chart. So let me show you what I'm talking about. I had it ready for you, by the way. So, and let me just show you what I'm talking about. Not so much the transports, but you put in over here the DAX, and you put the Chinese, the Japanese. And by the way, what else did I tell you today when we were way up? How unusual it was for us to rally when Bitcoin was getting trashed. I'm telling you, Bitcoin does matter these days. It's just odd on how that works. But this is all I was talking about. When I was talking about world markets correlating, all I was talking about, it's hard to see on here because we had such a big sell-off, is this. I hope you see when I zoom out what I'm talking about. Everybody thought is this going to break up and this is going to be a bull flag? So is this going to break up? Is this going to break up? Is this going to break up? That's what all I meant. They don't have to correlate all the time at all. So go on a 4-hour chart. You'll see exactly what I'm talking about. You see all those things that could be bull flags? So you don't know whether it's going to roll over or be a bull flag. And ironically, you still don't. The biggest tell I know right now is the bonds. That the bonds are doing this makes me suspect of something trying to break to the upside. So, keep that in mind. That's what I look at in there. Is definitely that's what I'm looking at. I got to tell you, Bitcoin is very difficult to say it has a doji because it trades like 24 hours. Very hard for me to figure it out. But you're right. I saw that too. In fact, when it did that, I almost got on stock twits again because I keep getting right on Bitcoin. And I almost said, watch that. That's a good tell. I saw this. That's what I saw. So I didn't call this part, but I called the second leg. You'll find a lot on our site. We make more money on the second leg than the first leg. So, just keep that in mind. Do I think the top chain, it's been so hard for it to give up. I'm not sure the top is in, and let me show you why. Because every time we start selling off, the sentiment shifts so darn quickly. So, look what happened today. I know a lot of you look at the put-call ratio on the far left. See that? Usually when it's under 50, under 60 on these three, and when this is under like 70, you sell off. This is the overall put-call of every option. Look how quickly it changed in the last hour. Look at that. You need where nobody believes we can sell off. So I'm not sure the top's in. And don't forget, when you say the top is in for a while like 87, the top in 87 was in for a month, 2 months till December. It was really weird. It was a V. It was the first V I experienced. But I still think it has to do with this. I put it on the morning charts already. Let me show you. I know that's a lot of things to look at. Look at this on a weekly chart. This isn't the ZB. This is the TLT. And that's what everybody's watching. That is a frightening chart right there. Doesn't mean it can't futz around here for months now. Because now it's getting oversold. Last time it got oversold, it futzed around for a year. I'm just saying that if it eventually breaks that ledge right here, 115, that goes to 100. And just think of it that way. If bonds get hit that much, think about what happens to your mortgage. So, just keep that in mind in there. So that's why I'm like, this was the dumbest rally I've ever seen, because this is a significant sell-off. And this just reminds me of 87, where you had this sell-off and nothing happens. Then you have the consolidation and the market zooms. And then you have that last leg, and that's what finally got to things. So, I was, like I said, I'm just so you know, we're selling our house here in Jupiter, and we're moving back to Atlanta because my father-in-law is sick, and we need to help with everyone. So today we had to take off 45 minutes while somebody went and saw the house, and just keep it in mind. I tell everybody they can only see the house from 11 to 1. And at 1:15, I'm like, I got to get back. I got to get back. So I came back and, but the reason I'm mentioning this in here is I went with my wife. So we're sitting outside where, with our dog. And I'm like, this is so stupid that we're rallying. We're rallying because everybody thinks Google and Amazon and Facebook don't care about interest rates. The NASDAQ is pulling up everything, but I'm watching purchasing power for houses is going down dramatically. I'm watching Best Buy go down, Tiffany go down. How can the market go near all-time highs? So just keep that in mind in there. So, Bob, I know you weren't yelling. So, but I'm just telling you about that is that there are effects from high interest rates that the market is discounting. But there's something else I wanted to show you that you're going to hit your forehead and say, why didn't I see that? Remember when we had the sell-off when I showed this, when I showed the head and shoulders top in the QQQ back here? Remember this on the right? Guess what the high was today? You don't want to know. I'm not going to show you yet, but go over here. There you go. I know it's hard to believe, but it hit exactly there. To the penny. Right there. That's pretty cool. So, how many times have you heard about back testing? But this is where it gets to be an art, not a science, because the SPX didn't come close. So I have all these charts that I put on the morning charts already about comparing the QQQ to the SPY. Because if you put these, and I added all the charts, like the 99 moving average, so you could get a perspective. And you're going to see that, is this going to roll over under everything like this rolled over under everything? So when you're asking, is the top in, I can't tell yet. I can't tell if this is going to have another move up to test that breakdown like the QQQ. Let me show you what I mean. See that breakdown? So I don't have the answer yet. I do know that when bonds go up, the yields go up like this, or the bond market get cracked, I look for the stocks that aren't bouncing anyway. So, keep that in mind. And I always compare the YM, because no matter what anybody says about it, doesn't matter the YM, I still look at the YM. And let me show you why. Go and look at a 4-hour chart of the YM and a 4-hour chart of, I'm only using the QQQ because it's non-24 hour, but just go take the NQ. Which one's going to win? No matter what you want to say, they correlate pretty well. Is this going to have another leg up, or is this going to follow the Dow? And it's just like the bonds. There's a point of no return. If this gets to here, this is going to start paying attention. Just that's what I'm watching. So, yeah, you got to understand the yield curve. The whole thing about today, and the reason I got bearish, if you want to know why I got bearish, Grafman, is when the Fed came out, and I'm watching CNBC, and I see the Fed say, oh, inflation doesn't appear to be that bad. Well, the first thing that goes through my mind is the bonds have to sell off. So, just to keep you in mind what I'm talking about, and when you talk about the yield curve, if the Fed acts like they're not vigilant toward inflation, then it makes the long-term bonds go down. It makes the yield curve steepen. So, everybody gets that wrong. They think if the Fed raises interest rates, it makes the ZB go down. It doesn't. It makes the VB flatten relative to the short. So, keep that in mind, what I'm talking about in there. So if the Fed says, oh, we're not going to care that much about inflation, it always tattoos the ZB. And when the ZB got tattooed, because remember, I was on early. I got on early. Somebody said, what do you think the bonds are going to do? And I said, I think they're going down. And if they go down that much, it's going to pull down the market. And that's how it all came out. So if you want to know what happened. So in here. And answer your question about the SPX butterflies. I mess around sometimes with the daily ones. And I got to tell you right now, when you see the bonds selling off and you see the SPX at 2740, and let's say you bought a 2730, 2720, and now it's worthless. Always buy back the middle strike and just let the other one run just in case. I'm just telling you, just do that. But in answer to your question, if I think the overall market is in a topping process, I'll go out to May. Because how many times are you hearing sell in May and go away and all that? Let me just show you something. But this is if let's say you want to do a lazy portfolio. So you're like, I want to be short in the long term. I think we're going to gradually sell off. You go and buy the 2800, 2700, 2600 butterfly. It's 1875. And let me just tell you why you do that. Number one, that's May. You start to get in a rough area. That's one of them in there. Number two in here, go and look at May 31st. See that? Change the date 2 weeks. Look how much it goes up. Goes up another $1.50. How about if you move it another 2 weeks? 24. You make 20% if nothing happens. I mean, that's, 30%. So, I mean, sometimes I'll go and do real wide ones like this. Now, if you're in a market that's going straight up, you don't want to do that. So I hope that makes sense of what I'm talking about. The other thing is, I know I've mentioned doing butterflies before. When the volatility is cheap, you don't want to screw around with butterflies because it can overshoot so quickly. Now, I did a Google butterfly. I'm probably going to lose money. And why do I say that? You're like, but the ESs are down 5 because we're oversold on an hourly, and I get worried about that. But I'm in a small Google butterfly. If the stock stays right here, I'm fine. I was betting on it going right to the strike price. That's all. But usually, I only like to mess around with butterflies around earnings or if the volatility is really high. So, I mean, keep that in mind. So, I mean, look at Roku. This is what I mean by big old volatility. If you did today a 40-45 spread because you think it's going down, $1.40 is just too high. It had to go down 5 points just to break even. That's why I didn't recommend that one. Now, the overstock one, did anybody do that butterfly in overstock? I know it didn't look good at one time, but you ended up doing great. Did anybody do that one? The point was the volatility is 103%. So if you do a butterfly in there, they're really cheap. And I know some people were doing the 65-60 butterfly, and it just wouldn't go your way. And the reason it didn't go your way is because the middle strike refused to go down. But there's a point where it does. Remember, this was 90 cents. It's now, you made 50%. So did anybody do that spread? I just was curious if anybody did. Oh, okay, but you're up in it now, right? I mean, the problem is, let me just tell you, when it works with a 5-point wide strike, you don't want to pay more than $1.50. I've just seen it a million times, maybe the last day or something. But because right now it's only $1.80 in the money. That's why you do it at 90 cents. What do I think it could do now? It's just like 8 million of these other stocks that are driving us bonkers. If it gets under here, it's going right to 60. How many stocks are looking this way, though? Let me show you what I mean. You got Apple. That's above everything by far. But you got things like the QQQ. Same thing. If it gets under here, it's going to go to at least 160. So you see, there are a million different things that are correlating right now. And, yeah, I mean, that's the beauty of it. You might have not timed it right, but you're still ahead in it, which is nice. But this is what everybody's going to be watching right here, right there. And they're going to be watching to see if this gets back under here. Because the Qs, everybody thinks, the technology stocks don't matter about interest rates. But if this fails, you know what I think. But I just can't tell you. That's why I've been concentrating on the stocks that get hit the most on interest rates. I mean, look at Lennar today. This worked great. So, I mean, let me just show you something, because somebody was talking about getting whipped around on the ESs. And let me just show you something about the difference about getting whipped around. Look at Lennar on the right, and then look at the ES on the left. And notice all these bumps and bruises in here where you could have gotten yourself hurt. What's the moral of the story? Look what this did. It went straight down. You never would have lost money. That's why I like trading these. This was more interest rate sensitive. There's another one in here that you're gonna die about. And it's like another one where you're going to slap your forehead like the Three Stooges, like, what was I thinking? When the bond market did this, when somebody asked me, what do you think of the bond market? Go check this out and don't get annoyed at me. Remember this right here? And I said the bond market's going down. Guess what got especially destroyed? Simon Property Group went down 4 points in the last hour. You're taking a stock that already looks terrible on a chart, that's in the retail space. Wasn't I just talking about retail, that retail is going to start doing bad? And then you already have it look bad, and plus it's interest rate sensitive. So now you don't even have to think of the ESs. You could have been dead wrong on the ESs, right on the bonds, and you would have made money in SPG. So, I mean, I think that's pretty cool. So, I just think that's really cool. Yeah, did Duke get, yeah, but Duke isn't in the same league, in my opinion. And it got hit, about 50 cents. But the reason that I like the other one is one of them's retail. I mean, they could have a big problem, just for a secular bear market. Plus, like I said, I like this in here with the buy right. And so far, the buy right has saved your butt. In fact, you're ahead on it. But I love the idea of Simon Property Group. I don't like that stock anyway. Did Public Storage sell off? No. And that's exactly my point. This is interest rate sensitive, but it's not. It's a REIT, a real estate investment trust, but it's Public Storage. If we have a weaker economy, more people put their stuff in storage. That's why I used to buy Public Storage and short SPG. I used to do that pairs trade all the time. So, I mean, just keep that in mind. Yeah, I mean, and Kevin, I'm not being ugly about that, but it's true. I mean, I'm not trying to be glib. It's just true. And that's why, look what happened today. I mean, it looks like they're in the same group. I mean, that's just amazing, the difference. So, yeah, it happened last time. How can you tell if a stock's interest rate sensitive? One is you need me. So, no, I mean, one is, you look for the ones that have high dividends. So the higher the dividend, the more it's going to be affected if the bonds sell off. That's the easy way. The other way is what gets affected, like Lennar. Like Bob and I have been right on Lennar, KB Homes, Toll Brothers, you name it. Why? Because, and this I put in the things tonight too. Check this out. Now, I know lumber's gone up and bond rates have gone up because the economy's gotten stronger, and that's good for housing. But go and check out the bonds on the right on a weekly chart. Right now, they're where they were in 2015. And Toll Brothers in 2015 was 30. Plus, look where lumber was. That's their biggest input cost. And look what lumber's done in the last 2 years. Why is this stock so high? Just because of a strong economy. That's all. But, you see the downside risk. You just see the downside risk. That's all I'm talking about in there. But in answer to your question, Graf, it's a great question. I'm not just talking about stocks like the real estate investment trust or utilities. I'm talking about what gets hit if interest rates go up. And that's just because I've been doing this a long time. Just like Kevin's been a builder. He knows all this. Carla, why do you think I've been bearish on GM? How many people have bought a car because of 0% financing or 1.9? That's why I'm bearish on GM, Lennar, GM. Then you think of things like Tiffany. I know the stock has benefited being in the top 10% and all that. But, how many of these things get, not as much Tiffany as, let's say, Winnebago. So how many things like Winnebago are financed? I mean, my goodness, look at the stock. It's acted just the way I told you would. How many of those get financed? And don't laugh, but Tempur-Pedic a lot of beds get financed. So, just keep that in mind that when you say interest rate sensitive, it filters to a lot of things, even Best Buy. How many times have you seen, you can have some kind of installment plan? So it filters a lot. That's why I think people underestimate how important bonds are. I mean, that's how I look at it. So, I hope that makes sense. But let me just tell you, I am staying away from the stocks that'll drive you nuts. So if you don't want to trade the SPY because you're like, the SPY scares you, just don't want to do it. Totally understand. When I was on the floor, if IBM was acting rotten on a day, because that was the pit I was in forever, and the SPY was going up, well, if the SPY keeps going up, IBM still might go down. Like today, I called this while it was happening. I told you that IBM is focusing more on blockchain, on Bitcoin, than the SPY. So what's the theory? If the SPY blips up, IBM, you might not lose any money, and you wouldn't have. But if it starts weakening, this is going to fall apart. It act a week all day, and it worked. But that's why I like trading stocks more than futures, because you can key off the futures. So, keep that in mind. I'm not sure I know what you mean, Larry, about that, about 5 minute under. I'm not sure I know what you mean. So, but I'll tell you what, I see what you're saying, right. Exactly. No, you're on the same page as me, right, Larry? How is everybody recommending GM except they think it's like a Ponzi scheme that the stronger the economy, they can just get away with it. So I hope that makes sense. So I just hope I make sense on that. And I don't know if you see anybody else on internet mentioning about, these interest rate things. So, just keep that in mind. But another thing, it's funny you mentioned Tesla. I actually, in the morning charts, I put that in there for this reason. Tesla, all the stocks that have high short interest rally when the market rallies, obviously, like, Roku went up in Tesla. But I'm watching this. Look at an hourly chart and a 15-minute chart of Tesla. Looks just like the QQQ. But this has a lot more resistance than some other things. If this gets under here, and that's the other thing I wanted to mention. So many people want to short these suckers up here. Wait till you can connect some dots. Now, I'm not saying I'm going to short Tesla yet because it hasn't broken. All I'm saying is whether it was Tesla, whether it was Google, just stay patient. I'm not meaning that as like condescending at all. I'm saying it like out loud to myself. But until you can connect these little lines, don't even think of shorting. See these? They actually worked. The bigger ones didn't. Not yet. So, at least that's how I do it. So, I hope that makes sense. Now, if you want to decide, you're like, I think Tesla's rolling over. Now, I told you the first dangerous thing is to get too short overnight when the hourly is this oversold. You want, and this is, I also said on the video tonight, I would love to see all night this happen. Because last time we got oversold, we rallied 120 points. I would rather see it do this. Get back to zero, have this way, and then you can have the big flush. And if you're wondering what I'm talking about, go and look at this from back here. Right there. Right there. You want to see it consolidate. I always like to see the consolidation part. Now, another thing, and I was gone this day when this happened. When you get the flush like this on an hourly and you see it rally, so it's rallying up, notice anything? You had a higher high, then, on the RSI, on the MACD, then you had the last coup de grace negative divergence, and that was it. And the whole market got destroyed then. It went down 500 points. So think of that on a more microcosm scale, and think of the NQ now. And same thing. You would like to see it work it off, go up to here, even maybe a little higher on negative divergence, or just sit here. Sit right here for a couple of hours. Let's say for a half a day. And then you're going to have this. And then you could go down to here. But you got to have that work off of the oversold. So NVIDIA is a hard one. I'm staying away from NVIDIA. Let me show you why. And I'm glad to get on tonight. Ask me anything about this. I want to look for stocks that are already getting, that are under everything. NVIDIA gets me nervous because it's over everything. If you want to trade it ultra short term, fine. But I just, and I see the head and shoulders, but I don't like when something's at a new high. I just get real nervous about that. So that's why I know they're boring, but I'd much rather mess with Lennar than I'd mess with NVIDIA. I mean, I know the fast money messes with NVIDIA, but I hope it makes sense what I mean. I want the things that refuse to go to new highs. So if I'm wrong, I'm not going to lose a lot. And that was another thing I wanted to talk about. Does everybody understand that I want you to be in this business a long time? And being in this business a long time does not mean that you have to hit a home run. What I mean is this, that when I showed you Apple on a 2-minute chart or a 1-minute chart, that you know where your exit point is if you're wrong. I called it right then. I was on. And I said, if you short right there, you know where to stop yourself. And then when it rallied, I'm like, you know where to stop yourself at the ATR trailing stop. All I'm trying to do is show you good risk reward and not show you how to take shots. I mean, could you have made, 40 points in the SPX? Yeah, but the better trade was not the 40 points. The better trade was that one when it got oversold in a downtrend. And this one, when it formed this. In fact, they will remain unnamed, but somebody told me that they missed this and they shorted 10 ESs right here and made $6,000 in the last 20 minutes. And they called to tell, they actually sent me a private email talking about how well they did. And that's the point. We have a lot of volatile markets in here. You don't have to sell on the way up because you're afraid everybody else is going to make money and you're not. There you go. They shorted right there and bought right here. I mean, that was pretty good. So, but I'm telling you, that doesn't have to be a double. It could be a lot of money. It's just you miss that futzing around. I'm just saying, there's always these little nooks and crannies in here. That's all I'm saying is, and you could see this. In fact, Kevin, that I saw that happening and I knew what the implications were. Little inside joke there, but you know what I'm talking about. So in there. But that's what I'm saying is you don't have to be there for the whole move. You're there to just be sure you're in the right direction. And you might ask, what do I mean? Well, look at this. Earlier in the day, it just never broke down. There was nothing that would have gotten you in trouble. Nothing broke down. Just didn't look bad. And I'm not talking about getting a little under a 200. I don't usually show a 200 on a 1 minute. I'm talking about that you couldn't connect any lines that would have made you any money until there or there. But at least you catch what I'm looking at. So when you're talking about you're not happy with pricing, great question. Number one, you have to understand overstock is a pain in the butt to trade with the options. But this is how I do it. OSTK. I think, let's just give that as an example. Where are most of the little letters? If most of the little letters are on like C, then you're going to want to put your spread order on the CBOE. Does that make sense? So if they're all X, you want to go to the Philadelphia. So let me show you what I mean. You go buy butterfly. I'm just throwing one out. See on the right where it says best? Instead, the drop down, you can do CBOE, Philadelphia, or ISE. And that's how I do it. You know, I mean, but, you know, I hope that makes sense. So, yeah, I mean, but I got to tell you is, well, I'll tell you another way. Let's say you want to do a 10 lot in overstock. A lot of times what I'll do is I'll put a 1 lot on every exchange. And if I get filled on one, I'll cancel the others and real quick go on that exchange. So I'll test the water with 1 lots. So, you know, I hope that makes sense. So, but like I said, I'm like right now, if I was trading the futures right now, when they're down 3, I know it's working it off out of 15, but oversold here. If you're going to trade just intraday, I'm watching this, whether I want to or not. I'm watching these 3 on the bottom. I'm watching the little inverse head and shoulders. I'm watching this is already over its ATR trailing stop, and so is that. So there are 2 things I'd be watching. Number 1, is this going to get back over this on a 5-minute? Number 2, I got to watch this 15-minute to be sure it's not too overbought. And I know there's big resistance at 27.10. But if I was throwing out a flyer here, all I do is I do this. Right there. You buy it here and you stop yourself here. That you have a stop here and you have, or you sell it here. You know, in this zone. But that's a tight stop. I mean, that's a tiny stop. That's literally a point. And, you know, but that if you're going to mess around at night and do a counter trend rally, you know, I mean, but that's what I do. Just like today, when this did this and everybody got stopped out here, you don't stop yourself there. You stop yourself at the ATR trailing stop and give you some, you know, a little bit of latitude. And it worked. I mean, it worked great. So, you know, I hope that makes sense. Right. You know what I mean about the one cancels the other, in here. And you can see it a mile away. I mean, seriously, if you, I was just talking, do you know who Doc Clayberg is? I was just talking to him on the phone. So I don't know if you know him from my old times. Really smart guy, great guy. He does all this system stuff, and I'm hoping he's going to get on and talk about it. Theoretically, if you had a 2-minute system that told you to buy here, sell here, buy here, sell here, buy here, I mean, that's got to be worth a fortune. He doesn't use the ATR trailing stop, but I'm telling you, I'd pay for a system that does that. I mean, geez, I would. So, I mean, my problem is anybody that's asked me to build it, I don't get the rights to it. So I have a problem with that. So, I mean, you know, I've talked about wanting to have some system that does that. So, hey, Kevin, if I could give you a system that you could go to bed and it would short there, buy there, short there, buy there, you know, and so on, I mean, you probably would pay for it, right? I mean, I would, because, you know, I've seen this work pretty well. But I don't have a way to do it. So, yeah, my problem is they don't even have a sell stop. If you were wondering about this, by the way, because a lot of people ask, let's just take overstock. See, because I don't know if you know there is something similar. Let's say you want to buy 100 share stop. There's a little thing on the right, a little gear. Let me be sure I do it right. There we go. And this pops up. And then it has method. And you can add methods. But it doesn't have ATR trailing stop. See that? It even has study. Simple moving, Bollinger Band, edit. And I've tried to find the ATR trailing stop, and it isn't in there. I've tried everything. So if you can ever figure that out, let me know. I haven't been able to do it. Yes, he's really smart with commodities. And he's really good with grains and commodities. In fact, one of the reasons I don't trade commodities is because people like him always know more about, they're actually messing around with the silos. So, I mean, just, he's smart. So getting back to it in here. Tomorrow, everybody, how many people, when you see it go down like this with the reversal candle, are like, darn it, I'm going to miss the short on the opening? I know you're thinking that. Everybody thinks that. And the point is, you'll always have those blips. All we're caring about tomorrow is about consolidation patterns. That's all we're going to care about. So if you miss the first 10 steps, you can make the next steps. Like this. Who cares? And like I said, I'm not being glib about this, but who cares if you miss this move if you can make that move? I think we know by now that Apple can move $4 and $5 in a day. So, I mean, just, you can see this pretty clearly. And, I was trying to show you that. So, I hope that helps in here. So, what else did I want to show you? Oh, I don't know about you, but another thing that you could do is a little tool, little trick. Why does it have ads on StockTwits now? Does anybody know? It's driving me nuts. Every time we have a big sell-off, that night I go to the sentiment. Every night. To see if it's drastically changed. You should do that. I can't do a StockTwits sentiment table every night, but as you see, it held steady. That can tell you that you're going to go down the next day because everybody didn't panic. So, I hope that makes sense of what I'm talking about in here. So SPY has stayed right around 53%. But I hope that kind of thing makes sense. QQQ was up to 70, I believe. There. See on how it didn't drastically go down? So I watch this all the time. So, I hope that makes sense. So, yeah, I agree with you, Cody, but here we go again. And I totally agree. Cody is saying that the ES looks like a ledge, but you don't want to touch it because it's oversold. Totally understand. Totally looks like a ledge. I mean, I sound like I'm from the valley right now with all the totalies. This I still think is going to be important. That cross. And by the way, somebody asked me about, did you see the PDF I gave you about SMR charts? Did everybody see that? I want you to realize that last year, I was recommending a book. I actually had it in the car with me reading it while we were waiting for the realtor, called Trading Day by Day. It was down to like $12. Let me find it in here. Trading Day. And it tells you how to trade the SMR charts. Right there. You can buy it for $14. You don't need a new one. Right there. And all it does is go into that thing about the MACD. The entire thing, that's all it does. Here, the entire book is about how to do the trade the SMR charts. That's it. And you might ask, what am I talking about? Let me see if they have, they actually show it in here. Don't tell me they're not going to show me any of them. There they are. That's the S&P charts. I mean, that's the SMR. I got these for 30 years. Well, 20 years until computers. I just figured this thing is the 310 16 MACD. That's all it is. This is the 49 moving average. That's all it is. No reason to pay for it. But the whole book talks about how to play it, how to trade it. It's amazing. And that's it. At $14. So just keep that in mind now. It's down to just buy the used one for 14. Oh, Cody, let me show you what I'm talking about. Let me find it. There. Now that's like, it's just on public domain. All it is talking about this. This hooking down and then making a lower low. Today was a big fake out for a little bit of time. But, I use this all the time. And the problem is, that's where it's an art, not a science, is it needs to be under the 49. Well, it wasn't earlier today, and now it is. So, but it's a really inexpensive way to find charts that you should be trading. So, I mean, like I said, I like free. SMR is like $80 a month. Don't go and pay for SMR charts when you can get the 310 for free. The only thing they have is it scans for these a little better than I do. So, but you can build a scan on Thinkorswim. So just keep that in mind. But it's really neat, that kind of thing. So, but in answer, this all had to do with what Cody was talking about. This might be oversold, but the longer term is really ominous right now when it hooks like this. So, when I get that, and I'm not sure because one's oversold or not, that's why I like playing things intraday like Apple. Because this, before it got oversold, had these little bear flags. And tomorrow, if we're down 8 like this, you're going to have bear flags right and left all day that you can play off of. So, I mean, keep that in mind. And who knows what's going to happen in the middle of the night, but I'm just saying I'm watching that. And that's another thing to watch. You had asked about correlated indices. For a minute, this looked like it was going to break to the upside, the Nikkei. Now it looks like a big old long-legged doji, one of those things I have up on my wall. So just keep that in mind. On the takeover stocks, I still initiate with an ATR. But I got to tell you, by the way, before I forget, because I know I'm going to forget, whomever asked me about UMP today and asked should they let their profits run, and I told them to sell half right here and stop themselves at 134.5. I'm very proud of that trade. So I hope whoever I mentioned that to is on the chat. So that saved you about $2.50. But in answer to the question about ATR trailing stop, Larry, the times that I stop looking at it and say, oh, the ATR trailing stop doesn't matter this time, is when I get my head handed to me. I usually still use it with it. Let me show you. When did I tell you I wanted to buy Maxim? When it was oversold. Look at this. This is a classic buy signal. There you go. Over the 49, curls up, and the next day makes a new high right here at 58. And, it went to 63. So, yeah, I mean, here you would have gotten killed. So I'm just telling you that you wait for your pitch. Oversold in an uptrend. That's all you're doing, or overbought in a downtrend. That's what I use the SMR for. And it worked. But let's see Xilinx. That one's a totally different animal. Look at this. That's getting overbought under everything. So I'm not going to touch it. But I'll tell you, remember, even when the market was getting destroyed the one day, all the takeover stocks went up on Friday. So, don't count out Netflix yet for that pop. So we'll see what happens. So any other questions for me? I'm happy to answer any. Yeah, Mattel. Let's look at Mattel. We can say whatever we want about this sucker, but you see this a mile away. It's holding up, number one, but go and put it on like a 4-hour chart. It's holding up. I mean, you can see that all the moving averages are trying to turn up. Let's see if it did any calls finally. And by the way, Silica went down on earnings, SLCA. Remember what I warned you, they never bought more calls after that flurry. You want to see persistent call activity. That's not a lot. But I'll tell you, I think Mattel is a great one to buy on dips, when the market has those little corrections or big corrections. But, look at I think the line in the sand in Mattel is here. 16. I mean, you can see it. So, I mean, if you want to buy on that little pop, that's fine, but I think the market might drag it down. Good question. No, I was just talking about not in the long run about the DAX and all that. I'm talking about right now. I was trying to get a feel of if one index broke up, are the other ones going to break up? Or are they going to refuse to break up? That's all I meant. So when the DAX was going down and the SPX was going up earlier in the year, a lot of the other markets were still going up. So it just wasn't enough of a divergence. But I was talking this time about this. This time was specifically about this line curling down, and were the other indexes going to disregard it, or was it just the NASDAQ? That's all I meant. So, like this. Let me show you. This is all I cared about. Was this going to hook up, or was this going to start rolling over and being one of those sell signals like those SMR charts show you? And there were a lot of them that looked that way. So I was wondering, was this going to surge and invalidate all the stuff? So that's all I meant, in here. Not all the time, because you're right. There were divergences and they never worked. But it's just like the bonds. There's a point of no return. And the point of no return is if if the SPX on the right, this isn't the SPX, but if it was going up and this cracked and went to here, there's a point of no return like the bonds today with the SPX, where the SPX does listen. It just didn't go down enough to make a difference yet. But I will show you something. Look now. You see what I'm seeing? That better hold. That will be a big deal. Do you see that on there? Let me take this bigger. I get excited seeing these. This. That you're watching this start to turn down. And if it breaks this, it could go down by that amount. That's 1,400 points. That'll do like my 2018 predictions about Octung Baby. Because if you look, there's no support on the DAX under here. If this breaks, that's one of those things that's going to happen overnight, and we're going to open down 500 points one day. Look where the support is on the DAX. So I'm definitely watching that. So, yeah, there's a time. Yeah, I mean, the bond. Hey, Bob, you called the bonds. You were saying, what do you think of the bonds? I'm like, they look like dirt. And if they go down that amount, it's going to start pulling down the market. So now I'm watching the DAX because, that opens before our markets, before the U.S. Sorry, I say our. I don't want to be U.S.-centric. So, I watched that on CNBC today, where CNBC is supposed to be an international show, and they're saying our kids brought home 9 medals. I'm like, that's U.S. kids, not our kids. So, I think Steve in Kiev wouldn't appreciate that. So, and by the way, is Steve in Kiev here? I want to see if he was on. Because we're going to try his wine tonight. So, no, we're not meeting here for the Europe Open. I will tell you something, Kevin. If you have an Interactive Brokers account, you can trade DAX futures, and the DAX futures trade great. They're an amazing – the chart patterns work great in the DAX, just to let you know. So take it – any other questions for me? All right, well, let me get going. I'll be on thanks, Em. Thanks for saying that. Like I said, the world markets, I'm looking at them more to see if that turn down is going to make a difference. So, I'm just trying to get tells. So take care. Thanks for being with me. I recorded this so I don't get any slack, and I'll put it on the site tonight. So take care.